Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I have been traveling a little bit, in the last few weeks and here and there, and I just came back from Leicester. I had to sort out a few things about the property. I will let you guys know inshallah soon about what's happening with that. But yeah, I feel like I haven't actually done much. I've pre-recorded some videos, but the stock market has changed quite a bit. So what I'm going to do today is just kind of go over 5 of my favorite companies and just talk about the general markets, where things are, and what the plan is and moving forward and so on. But before I get to all of that, I just need to correct something, because if you of you have actually, I've seen your comments but I have not actually responded yet. I made a mistake in the last video about the portfolio. Now when you do when I was doing that video, I used a Google function, so like a Google Sheets function, and basically what it did was it actually gave me the wrong calculations. Of course I should have double checked that, so I'm going to rectify that, and inshallah in the next video I will go over that. But in order to basically calculate the compound annual growth rate of your portfolio, these are the things that you look for. This is the formula basically, and I used a function that allows me to do this instead of actually manually doing it, because you can manually do it. All you need is the beginning of the value, so if you've started with 10,000 and you're now on 50,000, and how long basically that took, and that gives you the compound annual growth rate of your portfolio. But what mine did was it included all the basically contributions that I've made. Contribution is not part of the formula, so there is another function which I should have used. I think it's called rate. I'm going to double check that. I will correct that inshallah in the next video. So apologies if it looks like some crazy numbers. I think it said like 37% compound annual growth rate at the end or something like that. I wish that was the case. I wish I was the best investor out there, but apologies, and of course I'm human, I will make those mistakes. And thank you very much for the brothers who actually said, bro, just check this out, inshallah. Thank you, I genuinely appreciate that. That was a mistake from my side. Anyway, so what we're going to do now, as you can see the video of the portfolio right now, it's about just where it's been in the last few months. I feel like we actually we go up about 2-3% and we come back down. The highest it's been is 107 and 277,000 pounds, and yeah, it's been lower than that at times, and it's been going up and down. I think there was one day, I promise you, there was one day I checked the portfolio, because I haven't been checking it regularly. I think it was down almost to £4,000. I was like, whoa, what happened? That was the morning, and by the afternoon it was already up again. So yeah, so it's crazy. It's what is happening right now in the stock market is really crazy. So let's just check what is happening. But before we get to all of that, and before I share with you guys a bit of the news and then 5 of my favorite companies, okay, that's the reason we're here today. I want to share with you 5 of my favorite companies that I actually own in this portfolio. But before we do that, if you can actually join us on the Patreon account, that will genuinely help. It really genuinely helps the channel, okay? We've got a lot of subscriptions, equipment and things like that we actually purchase and so on, so it will definitely help me, of course, to do those things inshallah for us, and keeps me going inshallah. So if you can join us, it will be absolutely wonderful, where you get access to all the buys and sales, the family portfolio, the ETF trackers, and then most importantly, you got the private Discord, where a lot of brothers and sisters are sharing very good practices. They share what they're buying, what they're selling, why they're buying, and helping each other and so on. And I do contribute wherever I can. I don't as much as I should, but of course I'm going to continue contributing as much as I can, especially when I buy or sell or anything like that, inshallah. Now let's talk about the fear and greed and index. Now we are here, finally we're getting there, okay? And I get excited about this, and the reason I get excited about this is because the stock market has been going up for quite some time now, and this is the first time we're hitting this territory, and I think it may be in the next few months we might be hovering over around here. Now of course the earnings reports has now almost finished. There's not that many companies left. We've got Home Depot coming up next week, Tuesday. Apart from that, I think all the other companies that I own it's not basically none of them are reporting. And Applied Material will be interesting to see what they say. Other than that, there's not much left. So majority of the companies out there have reported good earnings reports. Some of them were punished to come, because they didn't do what they're supposed to do, and what the analysts were expecting quarter after quarter. But yeah, so it's been okay so far. So in terms of the S&P 500, where it is, so for just this month, as you can see here, we're down. Okay, 4% for the S&P 500. Dow Jones and the rest of them are not that bad. Okay, I'm surprised that actually in fact, yeah, in fact the Nasdaq is actually done slightly better. Slightly worse. So I was wondering what is going on here. So for the 1 month, the Nasdaq is actually, the composite basically is down about 8%. The Dow Jones is, yeah, we've seen it, the S&P 500 and the FTSE 100 is almost flat. So as you could see here, we are just this month things have not been great, but when you look at the year to date, that's when things slightly change. We've up, Nasdaq's up 13%, the Dow Jones about 5%, 12 or something percent, and for the S&P 500 and FTSE about over 6, closer to 6%. So we are still hanging in there. Like we're not doing badly. If the the market closes today, if this was the end of December, for example, 12%, 13% on the S&P 500, it's not bad at all. So yeah, we will see where we are. There is a lot of investors that are now a bit more skeptical about the stock market and where it's going to head, basically where it's heading and so on. So we might see quite a bit of volatility in the market, which is absolutely fine. I do actually enjoy that. Like I said to you guys, I like when I see basically this, because that means we can buy high quality businesses for basically discounted prices, especially if you are a long-term investor. If you are a value investor, that means you're looking for wonderful businesses for a discounted prices. That is absolutely amazing, and that's what we need to do. InshaAllah, set your change your mindset and think about the bigger picture. InshaAllah. Right, let's now talk about these 5 companies. Like I said, these are my favorite companies right now. That could easily change because these companies do change their models and whatever. Then of course I will also change my mind if that happens. The first one is Procter Gamble. Why is this company my favorite? Now, all of these companies have a lot of things in common. What they have in common is the fact that they have a predictable kind of income. They might be a little bit cyclical, some of them. That means their revenue goes up and down depending on basically the economy and so on. But one thing they do is they're cash machines. They basically have an excellent free cash flow. They have a really good profit margin, return on equity, and return on invested capital. These things tell us what basically base part of that revenue, how much of that is actually profit. Return on equity will tell us if the company is actually using our money to reinvest and create more basically for our money and so on. And return on invested capital as well. Okay, so these things are important, okay, in the long run. By the way, I've got a video coming up because I've had so many requests to go over some of these basically things that we talk about. Okay, so inshallah I'm gonna do a quick video just to kind of explain some of these things, because we've got a lot of brothers and sisters who are actually new to investing, and sometimes I talk about profit margins, return on equity, and so on, and I've been asked, what does that actually mean? What we're looking for? What is the what is the good margin for profit margin and so on? So inshallah I'll share that with you guys anyway. So as you can see, this is not a small company, 400 billion market cap. It has a predictable business. It basically, every time you go to the supermarket, you're probably buying their product. It has a wide economic moat. That means they have, they can fight the competitors. Basically, there are competitors in the market, but they are one of the best if you think about it. So current price is $170 per share. Excellent dividend yield, 58% is heading towards that, but 61%, which is highest. Okay, we want it to come back down to below 50, will be absolutely amazing. The latest increase was nice, 7%, which is quite nice, and the 5-year basically was about 6%. Now 68 years of increasing that dividend. You know what that means? This company is a dividend king. Kings are companies that have basically are in the S&P 500, okay, and they have increased that dividend for 60 years, 50 years plus. Now you get $4 for every share of this company that you own. Safety is 99%. The 5-year growth rate when it comes to the compound annual growth rate when it comes to revenue is about 4%. This is what we expect these companies, 5 to 10% every single year, 8% worth for revenue. Profit margin, we've seen it already. Free cash flow is absolutely amazing. Total return in the last 10 years. So this is what you would have earned if you own this company for the last 10 years. Per annum, per year, you would have actually made about 10%, which is good, between dividends and price appreciation and so on. Growth estimate next year 7% after that, 90% premium. So if we see a pullback in the market and this hits about 150 $40 per share. I promise you I will be loading up again because I really like the business. The next one is one of my all-time favorite companies, and that's Broadcom. Broadcom has done absolutely amazing for me. It's been one of my top holdings, one of my best investment I've made, and I really like the business model. I like what they're doing. I like the company itself. I like the CEO of the business. Really nice guy, and focuses on, you know, acquiring other businesses that will add value to the business itself rather than just wasting on some high-flying companies and so on. It's grown a lot since I've actually had this company. Okay, and as you can see, when it comes to dividend, one of the best when it comes to the dividends. Okay, 19% of the compound annual dividend growth rate in terms of the last 5 years. And you know, which is absolutely amazing, and they have increased that dividend for the last 5 years. Annually you'll get $2.10. Remember, they did a split for that reason. If you've seen my videos before, you might be thinking, what the hell has happened here? Of course, it's because of this split. Safety is perfect, 67%. You know, profit in terms of the revenue is growing about nicely in the last 5 years, 14%. EPS about, you know, 22%. Profit margin, return on equity, return on invested capital, absolutely amazing. Over $18 billion of free cash flow, 36% total return in the last 10 years. And look at this, they're expecting to grow the earnings about 18% every single year moving forward, and just next year will be about 27%. Fairly valued right now, $155 per share. Look at it right now, $148 per share. 155 is their price target. Really good company. If I was not up over 200%, I'll promise you I would be buying this company again. Now the next one is S&P Global. Again, another, you probably see me talk about this company a lot because I really genuinely like the business model. Currently it has a market cap of $150 billion, wide economic moat. In terms of dividends, okay, not you know, the best when it comes to the dividend yield, but of course that dividend is absolutely safe, 99%, so that means is safe. So the highest any company can get is 99%. In terms of the revenue growth and in terms of EPS, absolutely fine, nothing to worry about. Profit margin, return on equity, return on invested capital is not the best when it comes to these two here, okay, but anything about 15% is great, but 10% is absolutely fine. $5.7 billion of $4.7 billion of free cash flow right now, which is really good. Now, why you might be thinking, why is the free cash flow important? This is the money that company uses to pay the dividends. This is the money the company uses to pay off any debt that they have, acquire other businesses, buy back their own shares, you know, paying off debt, whatever they need to do, they use that money. Okay, right, 20% in terms of total return in the last 10 years, 12% in growth estimate next year, then 14%. Fairly value right now, $445 per share is where they think the price should be, slightly higher than that. Now let me just stop here. If you have not liked the video, there's about 50% of you guys that watch the videos that have not subscribed. Please subscribe to the channel and like the videos if you can. That genuinely helps the channel, and of course it means the world to me. Thank you. Right, the next one is Visa. You probably knew that was coming because it's one of my favorite companies. 488 billion market cap right now. Dividend, when it comes to the dividend side of things, this company is absolutely amazing, but they don't actually pay high yield again. However, look at this, 22% basically payout ratio, which is absolutely amazing. Latest increase was 16%, the 5-year growth rate of 16%. Now it's absolutely safe. Now when it comes to revenue side of it, about 9% in the last growth. They grew their basically revenue over the last 5 years, the compound annual growth rate of 9%. EPS about 12%. Profit margin, return on equity, return on invested capital, by far the best we've seen so far. Almost a $19 billion free cash flow. Total return in the last 10 years, 18%, which is absolutely huge. Then you've got what growth estimate next couple of years, about 13% and 12%. Fairly value right now, $272 per share. Right now it's only $260, which is really interesting. And finally, Home Depot. You probably didn't think this was on my list. This company is so overvalued. I wanna buy more, but it seems overvalued. However, they are reporting this week, so I'm hoping maybe 5, 6, 7% dip. Then I could potentially look at it again. Now 380 billion market cap, very predictable business. Okay, it might be a little bit cyclical, but I don't mind that at all. The dividend is 2.6%, which is fine. The payout ratio not too big as well. Latest increase was 8%. Sorry, the 5-year growth dividend growth rate is basically 14%, if I can speak. and 15 years of increasing that dividend. $9 is what you get from this company, and 87% safety, which is really nice. They grow in their revenue the last 5 years, or they grew that revenue the last 5 years about 7%, and basically 10% when it comes to EPS. Profit margin about 10%, return equity in the thousands, and return on invested capital is about 39%, which is absolutely huge. Again, another company with huge free cash flow, which is really good. Total return the last 10 years, 17% from Home Depot. Can you imagine that? Growth estimate next year 7%, then 3% after that. So it's a little bit of a decline. So hopefully just this might put off a few people, and then hopefully it might come back down. Okay, 27% upside right now, but basically premium right now, $270 per share, 300 and almost 350 right now. So there you have it. That's the 5 companies that I wanted to share with you guys today. These are my favorite companies. That doesn't mean go away and buy them. Please make sure you do your own research. Here is basically when it comes to Sharia compliance side of things. When it comes to debt and everything else, they are absolutely fine, nothing huge to worry about. If you have not joined on the Patreon account, please do so. I've got loads of more videos planned, inshallah. We're going to talk about properties because we have not spoken about properties, and I'm going to give you a quick update on what is happening to my property right now. So inshallah khair, I've got a lot more plans for us, inshallah. Have a wonderful day. Assalamu Alaikum.